Hi everyone. Welcome to this week update. As usual, we are starting with the DXY on the weekly time frame. Oftentimes, when we trade and we are not well equipped, we get emotional with this market, and emotion speaks to us and runs. And we are not supposed to be emotional trader or emotional trader. So you're supposed to understand the basics and how it runs. Most of the time, what we work here is you understanding of the structure and the wave pattern being created in the market. Now, dollar had been dropping till recently, which you can see here, and there's a push to the upside after this drop. And we must understand what the market or what the price is trying to paint. We can see this wave to the downside is like a three-wave pattern to the downside. And in these three waves, we can see that there is a corrective pattern here. And there's another corrective pattern here. Or probably, and maybe a wave 1 here, or wave A, the wave B, and down to wave C. Now, within this wave 3 or wave C, there are two possibilities in the intermediate time, two possibilities. Now, the first possibility is that we see this one to run down as a wave 1 of wave 5, wave 2 of a wave 5, and probably wave 3 of a wave 5. And if that's the case, we might be seeing a correction similar to what we are seeing here around this area, on the daily time frame. We'll see that correction. Then one more drop, it will finish that trend. And we are going to have either a big reversal or a big correction for further drop. That is on the long term. Now, the second possibility is that this is just A, B, and a C. And if this is a C wave, is it completed? And that's why I'm here to help you. Now, when you see a rejection like this, it tells you that the movement to the downside is not done yet, which means that they are not done selling dollar. The dollar will still continue to drop. And that's the information being gathered by this pin bar here. So you must know that this is not the time to buy yet. And it's still going to drop, probably drop to this low or break the low one more time before either we go up correctively or we see this wave as a wave 4. Now, that's the mode of the market rejection. So the pin bar is telling us that the market will still fall. Now, still on this weekly time frame, you will see that there's a gap here, and the gap at times could be like a signal or a magnet for price when it's correcting. So this gap here might eventually be filled by this or not, or just about that place before we see that drop. Now let's now dive down to the daily time frame. On the daily time frame, when you see and you are trying to interpret, you see that, oh, this engulfing nature of this candle, you might think, oh, the price is actually going up all the way to break up. But no. So what we are seeing in wave 3 here, or wave C here, is that we can see it's supposed to be a 5-wave structure. A 5-wave structure. That's what you see in a wave C or a wave 3. So, and not until it's 5 waves. So you see this drop as a first wave, the second wave. Then in the middle here, we also see a gap here. That's where the gap is, but it's just a pullback and a further drop. So up to now, we are not seeing the 4th wave. This appears to be the 4th wave. And there is a lot of alternation between wave 2 and wave 4. If wave 2 is simple like this, wave 4 is going to be more, expands. and vice versa. So we believe that we are still within wave 4 of that wave 3, and we're going to drop to break the low one more time. Now, going on to the 4-hour time frame, what do we have here? So on the 4-hour time frame, we can see a WXY formation here. The first thrust to the upside is a W. Now, in the middle, we probably have a B wave or an X wave. So the A of it, the B of it, and the C of it, which gives us a running flat in the middle here. Then we are now seeing the last wave to the upside as an ABC wave. If it will turn out to be a wave 1, 2, 3, probably we'll see one more correction, one more upside than before the 4. Or otherwise, it could just be an A, B, C to the upside around this area without breaking this area, without breaking 97,450. We should see the drop. It does not have to break this area. It doesn't have to break it. This is the primary 4 here of this wave. If you're looking at this scan here, maybe probably 3132, 3334, 35, probably primary 4. So this is where it might breach it or not before we begin to see the 4. Now let's flip to euro dollar. The same thing applies here. I'm just going to stick to the 4-hour time frame here. It's an inverse of DXY. So we can see with 2 here, simple correction, and a more complex correction here, probably a zigzag to the downside here. And this zigzag, it could stall, it has broken under the extension, maybe at 123, 127 extension now. It doesn't have to get to 1618, but it's going to fall more. What I see here, a fall, a correction, probably a correction, one more fall, and without breaking this level, I think without breaking 18,300, we're going to see a push. 18,300, so it's about probably 19, 20 pips more to the downside before it begins to go back to the upside. Pound dollar. The same thing applies to pound dollar. We are seeing these also at a zigzag to the downside. This wave is way extended, probably around this area without breaking this low here. There's no gap here. Without breaking the low of 36,400, we should see pound dollar also reversing back to the upside. But in less than 40 pips, this also will turn to the upside. If you look at the mood of the market for all of these, the weekly, you can see the weekly time frame on pound USD, it's a rejection, you can see it, and the same thing you'll see on the euro dollar, NZD USD. NZD USD, yeah, the pullback here, it's not as significant as the other ones. We are seeing probably the 4th wave of this also is, pulling back, and we'll still continue to go up until we break. We have to break this top, and before we finish this wave. So on the 4-hour time frame, the correction isn't as deep as we saw with euro dollar and pound dollar. So we can see, but this may still fall a bit more, probably around this area before it goes up. So this is the second wave here of this wave 3, and this is the 4th wave here. One more upside, then we're going to have a much bigger correction on NZD-USD. The much bigger correction is still coming that would be similar to this. Similar to this, yes. Something similar to this is still coming. It's still coming here. Now on USD-JPY, the yen pairs are correcting to the upside. USD-JPY. They are correcting to the upside. So another zigzag to the upside, probably to fill in this gap here before they begin to drop. So these are areas you expect this to get to before it begins to drop. A zigzag, maybe 123 extension, not more than 1618, then we drop. So eventually, this might just be the 5 waves to the downside of an A wave, a B wave, and a drop of a C wave, and the price may turn back to the upside. So, but we'll take it as it comes. Well, this is corrective in nature, as we can see. Yen, Euro, yen. I believe yen pairs are doing the same thing. Yen pairs are doing the same things. This a bit is wasting time here, getting more complex. Will this drop here? This one can drop from here. It's possible that it drops from here. Probably a small correction, and then A, B in the middle, or WXY in the middle. But in case they want to still go up a bit more, we'll see. But it's going to be an A, B, and a C wave to the downside before it turns up. Gold, which is the last one, gold. Oftentimes, the last video that I did on gold, I said, if you are trading gold, you don't want to continue to buy recklessly. You need to wait for correction to come. If you're buying, I said, you should be guiding your stop loss. And you can't just sell anyhow, because it's dangerous also to say you want to plug in to sell. Not until you see, a sell setup. Now, if you look at gold on the weekly time frame, so also from the weekly time frame, what you can see here, what you can gather is that this is also still going back to the upside. That's a clear rejection. So you must understand how to interpret these candles to your advantage. So eventually, this might just be the top of wave 5 here, or wave 3 here. Then this a wave 4. A wave 4 here. So this is a big 4 here. That's what I can see here. Right from this area, you can count your 1, 2, 3, 4, 5 waves. So this is your wave 1, wave 2, the wave 3, and the wave 4. So this is your wave 2 here. 1, 2, 3, 4, 5 of wave 1, wave 2, wave 3, and then wave 4, and it's going to go back up. So you have to look for the buy setup on the lower time frame. On the daily, so this is what we have. Like I said, here is your wave 2. This is your wave 2, wave 3. No, you can even say your wave 2 is here. Yeah, wave 2 is here. This is just internal structure of wave 3. So wave 2 is here, low here, then wave 3, your wave 4, and this will be pushing back very soon. You have to look for, let's look for a breakout structure to the upside before you begin to buy these. Now, here, what structures are we seeing? Maybe you can still fall to this level to fill up this gap. We will see. There's a gap there. Maybe not. So we can see the first wave, the second correction, and this is the C wave to the downside. It's almost at 1618. It's not yet there. But you need to look for breakout structure on the lower time frame. Let's look at that. On the 1 hour time frame, The breakout structure is still high up here. Let's see if price will just do a small correction to the upside and fall again before we begin to buy. So we may go down one more time or not, but this will be a good structure to break. Really, at the break of this structure, you might cautiously be looking for your buy position. I think with that, I've come to the end of today's weekly update. Don't just watch this video. Share it with your friends. Share the link with your friends. Press the bell button for notifications in case I release a midweek video or any video at all. Do like and share it. Thank you. Happy trading. Bye.